Some economists in Singapore have raised their full-year growth forecast for 2025, following better than expected second quarter results. According to advanced estimates, GDP expanded 4.3% despite US tariff uncertainty after a 4.1% rise the previous quarter. Nadirah Zaidi has more.
The manufacturing sector emerged as the star performer in the second quarter with a 5.5% expansion driven by demand for electronics and precision engineering.
I guess we can thank the front loading of manufacturing and exports for that, because if you remember, second quarter was during the 90-day suspension period for the Liberation Day reciprocal tariffs. So I guess, people got busy trying to preempt what will come after the 90-day suspension period is over.
In the second half, though, front loading is expected to ease, with business confidence shaken by the flip-flops in tariff announcements. Still, the risks of recession are unlikely, given an extension of tariffs to 1st of August.
It's going to be a story of like one step forward, one step back. You won't get an outright technical recession as in 2 consecutive quarters of sequential contraction, but you could get like what happened in the first half, which is one quarter contracts, the next quarter rebounds. Then you could potentially, the second half will be the same story.
The Trade and Industry Ministry has flagged tariff uncertainty as a continued threat to both Singapore's economy and the global market. But there are bright spots, especially in domestic-oriented sectors like tourism and construction.
I think momentum continues to be quite positive, and with more events coming out later this year, for example, the F1 or other concerts that's upcoming, I think there's still some potential for tourism and for other secondary activities to happen in Singapore. So this should cushion the uncertainties from the tariffs, which I think in the near term, we'll wait on a lot of business decisions. But I think companies will still continue to want to think about operating in this new global environment.
He adds that Singapore's relatively low tariff rate of 10% could put it in a stronger position, an opening gambit to an unknown future.
And for more analysis, we're now joined by Sumit Agarwal. He is Professor of Finance, Real Estate and Economics at the NUS Business School. Professor Agarwal, better than expected performance this quarter, but how sustainable is this growth?
Yes, I agree. It is surprising on the upside. I think thanks to the stronger exports and a rebound in services. I guess the question is whether it will last will depend on global demand and how confident I think the consumers and businesses stay in the months or years ahead in Singapore.
Well, some economists have upgraded their forecast for Singapore beyond the 0 to 2% range for 2025. Given that uncertainty remains around the US tariffs and geopolitics, should we still be bracing for a slowdown?
Absolutely. I mean, it is great to be optimistic at this point. But at the same time, we shouldn't ignore the global risks like the US-China trade tension. Also, there are lots of uncertainties going on with Iran, Israel, many other uncertainties that I could foresee in the future. And especially in light of that, Singapore being a very open economy. So any global slowdown does have an impact on our economy. So I think we have to be vigilant. At the same time, we have to be optimistic.
With Singapore being an open economy, could regional trade or domestic resilience offset global headwinds?
Oh, yes. I mean, I think that's the balance. I mean, clearly there is this negativity on the other one side. But I think the trade, these tariffs and people trying to front run these tariffs and trying to increase productivity and production are one way to kind of deal with it. But I'm hoping the consumers, the businesses in Singapore are saying, look, we are going to be staying strong and we are going to make the economy better.
Well, having said that, there are some bright spots in domestic-oriented sectors like tourism and construction. Do you see them potentially leading Q3's performance?
I think they can definitely help. Look, tourism is up with more visitors. Construction is very busy with lots of major projects happening in Singapore, in the residential housing market, commercial market. So I think these sectors can grow the economy, but they can also offset the slowdown that we could see from trade. We will have to see in the months to come ahead how resilient tourism stays, or if we get another macro shock that could, because of trade, because of wars. But if it continues in the same path, I think I'm very optimistic.
Oh, well, what else do you think could be the key drivers of growth in Q3?
I think there could be many. So manufacturing is clearly one. Consumption, as I talked about, is another one. That if consumers in Singapore feel that, look, spending is not a problem, the government has been very, very supportive by various, macro-prudential policies or fiscal policies. So I think those all can help Singapore stay ahead, even though we know that there are many macro shocks going on, negative macro shocks.
Can we then expect an increase in consumer spending, Professor Agarwal, as well, given the positive outlook, even as concerns about a labour market slowdown loom?
Yes, I mean, this is one of my bright spots, I think. Consumers should hold up the spending for now. And the main argument for that I have is because we see very stable inflation in Singapore. And the government has been very responsive and very helpful to providing various support packages in terms of fiscal stimulus. So I think combined with stable inflation and fiscal stimulus, I expect spending to be very, very strong. And hence, I expect us to have a pretty strong next half a year.
All right. Thanks very much for speaking with us, Professor Agarwal. That was Professor Sumit Agarwal from the NUS Business School.